Let's take a quick look at the S&P as well. So the S&P is kind of in a very interesting and critical position. And here's why. That I don't mind telling you that normally this correction that the S&P is in would normally last a little bit longer than tomorrow. And therefore, if this market is going to do something like break out prior to tomorrow or even tomorrow to the upside with an actual confirmed breakout, that's a peculiarly strong position for the market to be in under the conditions that exist right now in the market. And if that's the case, then that could indicate tremendously higher prices coming. So keep that in mind. Ordinarily, that's not going to be the case, but we are, coming into a very important week with a lot of volatility, which is the week of March 20. Let me just make sure I have this correct. Yeah, March 28th, which is Monday. So it's really interesting what they're doing here. Here's the hourly chart of the S&P, still very strong, acting very well here in spite of earlier pullbacks and so on. So we're going to be very interested to see how this plays out. Now, because of this, again, today I don't have a ton of time for this meeting because we want to be positioned properly, and just in case we do get up to certain important levels on the upside, we do want to take action and we want to do all the things that we normally do. I'm sure you would probably do those things or have certain things that you would want to do at certain conditions as well. So again, this is the semi-annual chart, and this was officially the last 6 months of last year we were saying was the top. And it did actually, but our forecast was that if they did exceed it, they wouldn't be able to sustain it. They did exceed it by 8 points, and then they had a big decline. So that's nice. But we're not forecasting new highs in the S&P, but we are forecasting, and I can't go into details here, a further advance from current prices, generally speaking, current prices, a further advance, and the timing for that advance. And it's pretty interesting. I mean, I'll give it all to you if you take a trial or come in and subscribe. But it is, with everything else being priced in, the market's actually in a position for a pretty sizable move. So just keep that in mind. We haven't changed our forecast for the 6-month top, but we are forecasting a pretty important move. Let's see. Stu says, since you mentioned that the ES will make a semi-annual high first half of 2022, it already did, yes. Is it on time or 1 bar late, and would a spike above it in the second half negate it? It wouldn't negate it if they spiked above it in the second half. Only closing above it on the same time frame that the top was created on would potentially negate it. So, and again, the forecast that we have is, I think, a pretty interesting one for a good part of this year. So, what we think the market is going to do and what we've worked out, maybe that's a better way of saying what we have worked out that the market's likely going to do for the rest of this year, even though, and I don't mind saying that it is in a more bullish than bearish position. But every time the market goes down, like if it were to go down in the next, short-term time period here, as we think would be more normal for it, if that was going to happen, it's very important how they handle themselves on that decline to further indicate whether our larger forecast is correct. So that's something that is a very common practice with me that you also will not read in any books. The practice of watching how the market handles downside targets that are meant to occur at a specific point in time, since most people haven't put that type of strategy to work or have that understanding to do that, during the period that the market is completing those prices, which we forecast all the time, that's a really important time to see how the market's handling itself, whether it's very buoyant on that particular point in time or whether it's above it. A good example of what that might look like is the market coming down to a point, say right here, and this is the on-time bar for them to be there in time. This is the on-time bar, and this is the price. If they came down and didn't touch quite, they just got really close and then turned up, this is one of the strongest positions because they bottomed 1 unit early and they couldn't quite touch the price. That's very strong. And there's variances about how other ways that they could do it, but I'm just giving you an example of how the market can show strength, but only if you know that this is what the market is trying to do. Then you can then say, well, it came in 1 unit early and it was light on touching it. It missed it by 3 ticks, and now we're moving up. That's a very strong position for the market. That means that there's a tremendous amount of buoyancy in the market, and that buoyancy is pushing the market up. Even while it's going down, there's a stronger than normal force pushing up. You didn't know that. You didn't read that in books, but that's what's happening. The market, while going down, is buoyant because a larger force is still resident, getting ready to express itself to the upside. So if we see that type of action or other variances on this, we can know or surmise that our larger forecast is still correct.